Well, hello. Welcome to our first Bitcoin market timing Zoom call. um, I asked my good friend Mike Alexander here to join us on this call. Mike started with Bitcoin way before any of us, back when they were still in the cents. And so, he has a wealth knowledge about, Bitcoin, the fundamentals behind it. I had to, so I invite him to join me on this call to share with you guys, sort of, give you the whole rundown about Bitcoin and then get into the more specific of how to time the market, right? When to best buy. This call is not meant to teach you how to trade Bitcoin. That's not what this call is, because that gets into a much more complicated topic. A lot more technical than we can do on this call. What this call for is more of how to, because one of the questions I get a lot is, what do I think about Bitcoin, is number one, and number two, like, should I buy now is the other question. And I get that a lot. And you don't hear should I buy now when the market is down, when you should be buying. You only hear when should I buy now when the market's all up and everything is hyped up. So I want to share with you what I found in my journey of investing in crypto here, of when to best make that decision, so that way you're able to make those decisions on your own, without having to consult with me or Mike or anybody, really. So you have your own strategy of how you can go about it. So I know we have kind of a wide variety of different levels of experiences with crypto here. If you guys can do me a favor, in the chat box, if you can just like type in your question, so that way we can kind of see, what kind of questions you guys have in mind. So as we go through this, we can address your questions as we go through it, and then at the end, whatever questions that has not already been answered, then we'll tackle them at the end as well. Okay. Really, yeah. This call is completely just informational, educational. We're not selling any kind of cryptocurrency or any kind of courses or anything like that on this call. All right, Mike, are you ready? Awesome.
Good to go.
Awesome. So I first invested in Bitcoin back in 2016 when it was like around $700 a coin. My first $100 worth of Bitcoin, I bought it at the ATM machine. Can you believe that? I think it's off of 59 in Wesleyan area, Kirby area. I actually first heard about Bitcoin years ago when it was around $1. My nephew from Vietnam had told me about this, this internet money called Bitcoin. And back then I was like, oh, it's just a scam. It's just fake money. So I never looked into it. Right. And obviously, we know where Bitcoin has been. And Mike, you want to share sort of when you first learned about Bitcoin, and when you also when you first invested in Bitcoin?
Yeah. Thank you, Tim, for having me. I mean, I always love talking crypto and real estate and just business in general. But yeah, I come from a financial stockbroker background from 2005 to 2013. And I was telling Tim today, actually, at a little lunch gathering, that I got exposed to Bitcoin I want to say it was the week of Hurricane Ike, when 2008, in 2008, when the hurricane hit, or the first part of 2009. I really don't know exactly when the good Lord planted the seed on for me, But somewhere around there, the financial crisis was tumultuous, and I can remember going into Bank of America. Excuse me, I went into Merrill Lynch where I worked Friday, and come Sunday, I'd never been called into the office. I was now working for Bank of America, and I realized right then and there that the banking system was nationalized and bailed out right then and there. And that week, I saw enormous custodial risk where I saw $3 million leverage positions go down to zero.
Oh,
And
wow.
so I understood that the systemic risk in the system and the bailout was necessary because there was so much leverage. And I had also started as a mortgage lender, and I start in 2004, 2005, and I knew that the CDOs, or the collateralized mortgage debt obligations, were also just leverage on top of leverage. And so I came at it from more of a perspective of custodial risk and understanding the necessity to mitigate custodial and systemic banking risk of the
Could
system
you
itself.
could you explain what custodial risk is or means?
Yeah, systemic banking risk is the risk of default of the entire system.
Mm.
And many people haven't had that kind of experience or study. But as Tim had also experienced, and I had also experienced, we got to witness currency devaluations. I did in Mexico. My mother's from Mexico. And so in 94, 95, I got to personally experience a 70% Mexican peso devaluation that led me on to a lifelong study of finance. And here we are. And blockchain instantly made sense to me as a way to cut out the middleman for custodial risk. And for those reasons alone, I was already attracted and hooked to Bitcoin. And to drive it a little bit further, when I actually got invested, even though I knew about Bitcoin when it was sub $1, literally looking at it when it was 5 pennies to 9 cents, I was already fairly good at market timing and technical analysis. And so I told my wife, I was like, we've got an opportunity to retire. I mean, really retire here, believing already in the Bitcoin gospel, I'll call it. But the price of Bitcoin was around 11 cents in 2011, and I told my wife we could have a small wedding, or we could have a really big wedding and not buy Bitcoin this go around. And she doesn't remember it that way, but. But 11 cents, man, it was that close, and I
Wow.
couldn't figure out how to buy it. But being a studious market timer, I waited from 2011 all the way until 2015 until I saw the spike low and Bitcoin hit at 150, which was my price target, and it hit 150 just due to the retracement in Fibonacci's retracement marks and whatnot. And I managed to scoop up Bitcoin at $200. And so I did Litecoin at 4 and Ethereum at 12. So I got to witness 3 coins go over 100x in 2015 to 2017. And that's the rest is history so far.
Yeah, I remember those back in 2016 when I first started this whole thing. And yeah, when Litecoin was, well, Ethereum got listed on Coinbase first, and then Litecoin did, and it was like early on in their listing, and seeing how much they've skyrocketed since then has been definitely amazing. Yeah, Mike sort of lead in about the powerful thing around Bitcoin, and the reason why a lot of institutional money. The reason why 2020 here has been huge for Bitcoin, and kind of had a major comeback from the downturn, is because of the amount of money that's being printed, not only in the US but worldwide. Every country, because of COVID, has been printing a lot of money. So you have investors that don't normally invest in Bitcoin, guys that have a lot of money, don't normally invest in Bitcoin, are now considering or have already invested in Bitcoin just to hedge against the US dollars, just to hedge against their currency devaluation. And so Because of that, and plus, it's PayPal got on board. PayPal used to be very against Bitcoin. Now they got on board and accept, Bitcoin, Litecoin, Ethereum, and Bitcoin Cash as a payment, and and so that also created, a huge sort of acceptance, right? Like, and also, mass market, being available to the mass market. So those two things has been helping, Bitcoin and cryptocurrency a lot this year. And so that's, when you're looking at Bitcoin and cryptocurrency, that's the first thing you want to look at is like, is this something that's real? Is it going to be something that's going to be here to stay? Or is it going to be a fad that's going to go away, in 5-10 years from now? Obviously, if it's something that's going to go away, then your strategy, or at least if you believe this is something that's going to go away, you're going to have a much more short-term strategy than if you believe that, hey, this thing's going to stay. And so you have a much more longer term strategy, right? And yeah, so we wanted to give you, yeah, go ahead, Mike.
I was going to add to that being in the financial services industry from 2005 to 2013, I constantly contemplated how to preserve, your do capital preservation and preserve your wealth. So I've been a gold silver bug from way back also. And Trace Mayer was a blogger that discussed Bitcoin and blockchain when it was $2 million market cap.
Wow.
And I was introduced to Trace Mayer because of gold and silver. And to me, Bitcoin is, I understood that it was a volatile, quote unquote, risky asset that had just emerged and was going to be extremely volatile. I didn't know to this extent. I don't think anybody could forecast that. But what I did understand is that it would eventually mutate to be a reserve treasury, a strategic reserve asset for investors and major institutions. And I just believe that early on. And to me, that's also one of the reasons why Bitcoin should be a part of the foundation of anybody's overall nest egg or portfolio as part of the foundation.
Right. Yeah, for sure. For sure. So, yeah. So, I mean, we're not going to sell you on Bitcoin on this call. We're going to assume that you already sold on it. And that's why you're here. And so I do want to address a couple sort of really fundamentals stuff around Bitcoin, because one of the comments I hear a lot is, oh man, Bitcoin price is way too high already. I want to buy smaller coins like Litecoin or Ethereum. Well, and I want to explain, and the way I've been explaining is like, think of a Bitcoin like a dollar, right? When I can buy $1 from you, or I can buy 100 pennies from you, right? So Bitcoin, that means I can buy a fraction of $1 basically. In Bitcoin's case, there's 1 million satoshis in one Bitcoin, so I can buy like 1 million or whatever, however you call that, of a Bitcoin from you. So that means that when you're investing in Bitcoin, don't think that you have to buy the entire coin. Okay, it is going to be a goal for a lot of people, because like just the mindset, it's like I gotta have a whole Bitcoin. So that's why like this whole thing about supply, demand, supply and demand, right? So more because of that mindset of I need to buy the entire Bitcoin. A lot of people will try to buy the entire Bitcoin, and so there will be a lot more demand than there are supply for sure. But in the future, it's gonna be hard to buy an entire Bitcoin. I mean, you're just gonna be trading satoshis and not the entire Bitcoin anymore. But yeah, so understand that yes, Litecoin is much cheaper. Yes, Ethereum is much cheaper, but it's never gonna be able to compete with Bitcoin Because Bitcoin, I mean, as you can see, like it's the first one, it's the most popular one. It's a one that has the I mean, among major coins, anyways, has the most limited amount of supply. Um, and like even if you take Ethereum as an example, Ethereum has not declared a maximum supply yet, right? They have a maximum per year that they would print, but they don't have a maximum total. So Ethereum can print billions more Ethereum. Well, I'm using print because I'm trying to relate to currency, but mints is what or mine. They can mine a billion more Ethereums. So there's no cap versus Bitcoin. Bitcoin is the most decentralized, and and like you can't get access to any entity that controls Bitcoin because there isn't any. It's a hard cap. There's nobody that can increase that cap, like unlike Ethereum where they can increase that. And my like your if you only depending on how much money you have to invest, obviously if you have a lot of money, then yes, diversifying makes sense. But if you don't have a lot of money, so where diversification doesn't really matter, I say just to put in Bitcoin, and not worry about trying to diversify. What are your thoughts on that, Mike?
I mean, depends, yeah, where everybody's at. I was going to add to what you were saying. Bitcoin has about 98% market dominance on all the overall of crypto infrastructure, and therefore it is the preferred strategic reserve asset of billionaires and major institutions, simply because other major institutions can't buy silver, or they can't buy the market cap of something that's so small without pushing the price tremendously. And so Bitcoin is going from a volatile asset to a very stable asset right now. It's in its transition phase, and I would say it's in the early innings of that. But as far as the allocation, the appropriate allocation, not advice. Talk to your professionals. This is just opinion here, of course. But in my preference, if somebody's just saving a little bit of their paycheck each month, or they have $100,000, somewhere between 2 to 10% allocation might be appropriate. For myself, I keep about 10% of my liquidity in Bitcoin as a whole life insurance policy, is what my perception of Bitcoin is. Of course, that portion of my allocation in my portfolio, I consider long-term, 5 or 10-year time horizon, because the volatility is still there. In the short term, in the 1 to 3 year time range, you might buy Bitcoin at the wrong time, and it can take 2 to 3 years to recover to where it was. But right now, when the tide is rising, it lifts all boats, and I would say the tide is good to go surfing right now.
Yeah, for sure. So Brian has a question: with a $1,400 investment, would it be best to buy a portion of Bitcoin or 2 Ethereum over a 5-year period? My take on that is just to buy Bitcoin. What would be your $1,400 investment? What would be your take on that, Mike?
I think that with a $1,400 investment, you can have about. I like to split up the allocation into, like, I call them like bullets, or rounds of where you deploy the cash. And because there's volatility in the market, it's good to just put an initial position, depending on where you want to be, but somewhere between a third to half of your initial position. Just go ahead and place an order, a limit order or a market order, and on the other portions. But I would consider splitting $1,400 maybe into 3 tranches, 400, 500, 500, and at least getting your toes into the market. But I do prefer I personally split my coins up across 3, right? And so I still prefer to diversify, even though I believe Bitcoin is the granddaddy. And it is ultimately all a speculation and a roll of the dice. But to answer your question more accurately, is I like to ladder down, at least get in the market, and then put some limit orders 10, 20%, or 30% lower than the previous orders or per entry points. So
Yeah.
that gets your cost basis into a better position.
And I'm gonna further clarify what you're saying here, but yeah, you're explaining more of a buying strategy, dollar cost averaging your buy. The question is more around, should he go all in? All What I mean by all in is just stick with one coin, Bitcoin, or diversify into Ethereum, diversify into XRP, which we'll talk about that a little bit. What would be your thoughts on that?
I still like to diversify myself, but I myself am about 70% allocated towards what I would consider the cryptocurrencies like Bitcoin.
Okay.
But even amongst my cryptocurrency portfolio, I am spread out across several others, including Litecoin and Monero. And with the other third or 30% of the portfolio, I do like to diversify into other industries and sectors, including the infrastructure, which is the infrastructure play would be things like Ethereum, EOS, Neo are the three big ones for infrastructure plays. And then there's a bunch of other financial infrastructure plays or decentralized exchange plays. Yeah. And so again, I come from a asset allocation portfolio mindset where I allocated like 300 to 350 million for other people from 2005 to 2013. And so I could go really in depth of how to allocate it. But to answer your question, I do like to diversify a little because I find that also the infrastructure plays of Ethereum are a little non-correlated. So when the market's going down for Bitcoin and the market's going, when the market's going down for Bitcoin, sometimes the market may be going up for Ethereum. And that presents a really good opportunity to rebalance the portfolio, remove some of the volatility, and increase the juice in the gains. A little more complicated strategy, but yeah, I like to split it up and diversify it a little.
Gotcha. Yeah. So there you have it. For me, like it's like I said, it has a lot to do with how much you're investing. But I like to keep it like simple. Where you don't even have to think about it, because it is ideally is that you treat this as a set it and forget it type strategy, right? Like you're gonna buy, like my wife, she probably hasn't checked her Coinbase account in a couple of years. You know what I'm saying? Like she doesn't care where Bitcoin is. It's just you just buy and you just hold and wait, right? So, I do have something to share later on, and I'm probably somewhere in the conversation I'm gonna have Mike talk a little bit more, and I'm gonna do something just to give you a comparison of what your investment would have looked like with Bitcoin, with Ethereum in the last few years, with Litecoin. I only got the data for Bitcoin. I didn't think to get it for Ethereum and Litecoin, just so you have some comparison. But in terms of XRP, XRP is in a lot of trouble right now. I say definitely stay away from it. I know some people said you should buy. It's a risk. Like if you do buy XRP, you just know it's a gamble. Okay, it's not a proven investment like Bitcoin is. It's a very centralized platform. I mean, they can print as many XRP as they want. There's no limit. They can print billions of them. So and now they're in trouble with not just U.S. SEC, but in SEC in other countries as well. So yeah, if you do get into XRP, just know it's a roll of a dice. Just play it from that perspective. It's not something that I would recommend as a long-term strategy at this point. Okay. All right. Okay, so let me see here. How much, Natasha asks, how much do you recommend for a minimum deposit to invest? How long usually wait to see great return profit? You know, I think you mentioned like 10%. Was it 10 or 20% of your liquid that you invest into crypto, Mike?
You know, myself, I only do, ideally, I like to do 10%, but with my wife still not being fully on board or understanding, she allows me about 4% allocation of my overall each check. So that's very small amount, but I do such a good job of trading it that I've already accumulated over 10 to 15%. And I believe that small allocation will actually outgrow my entire liquid net worth very soon. But I prefer minimum $300 just because there are transaction fees and you don't want to eat up all your money. But I think a minimum tranche of 300 can be fairly good. But you know, honestly, if you got $100 and
Yeah.
that's all you've got liquid each month, that's very it will make a great impact over time. But
Yeah.
if you're looking at doing this in less than 1 to 3 years, it might not be a good strategy. But we're at a unique moment in time where whether you're looking at the 1 month, the 6 month, the 1 year or 3 or 5 year or 10-year time horizon, I happen to think we're at this amazing coiled spring point juncture in time where I mean, not advice, but I mean, I think it's a great time to get in, even at these high prices.
Yeah. So so yeah, I mean, you know, you really do want to look at this from a long-term perspective. If you want to do this as a short-term, trading, we won't cover that on this call so much. That's, you can watch some YouTube videos and get some training around trading. That's a completely different topic. The short-term in and out. It gets a lot more complicated than what I can explain on this call. But all right, we're gonna go. Here, you know what? Let me pull this up. So to give you guys some ideas here. So one of the let me see here. Share screen.
Yeah, mind you, I'll add that I'm up about 300% this year already from March till now. So getting in early is one of the most important keys.
Yeah, for sure. So I'll give you an example. I'm going to use the 100-day moving average as an example. So one of the strategies that that I share about is is this thing called a moving average. What a moving average is basically so I'm gonna hold on. I'm gonna close out some of these so that way it gives you an idea. This okay. So this white line that you see on my screen here. Can you guys see my screen?
Mm-hmm.
Okay, yeah.
Yes.
So this is a 50-day moving average, and this yellow line is a 200-day moving average. Okay, so moving average means that it's the average price. So 50-day moving average means the average price of the last 50 days. Okay, and so every day it will calculate a new moving average price. Okay, so like this yellow line calculates the average price of the last 200 days. Okay, each of these they call it candles. It's represent 1 day because I set it to 1 day. Okay, so in case you're wondering what tool I'm using, there's a website called tradingview.com. Tradingview.com. You can get a free account, and so you can set this up on your end, play around with it, learn it. But this this 50-day moving average in a bull market like we are right now, a 50-day moving average is a good one to use. And I'm going to explain the difference between You know what? I'm just for the sake of now, I'm just going to change this real quick. I'm going to change it to a 100-day moving average instead of 50 days. Okay. All right. So don't worry about, these green cross, red cross stuff. It's just blow it out for now. So I just changed this yellow to be 100 days instead of 50 days, and I'll explain why in just a little bit. So one of really simple strategy, and I try to keep things as simple as I can to explain to my friends and family. So I'm going to explain a very simple strategy that you can use to determine when would be a good time to buy. Like when you can buy more, I guess. So one of the strategies I use is called this moving average, right? So basically, the way it works is that, let's say you're buying on a 50-day moving average, okay? All right. So what that means is that whenever price, so I'm going to zoom in here. Whenever price, okay, goes below a 50-day moving average in a bull market like we are right now, it's a good time to buy. Okay, so as you can see right now, if we went back to September, pretty much the entire from September 3rd to October 7th, okay, would have been a good time for you to buy. All right, if you had bought during that time, you're looking at a buy price here of around $10,000. Okay, so right around $10,000. Okay, so if you had done that, you would now have more than double your money, right? Same thing here. If you had bought it down here back in June and July, you would have been in the 8,000-9,000 range. If you bought it over here back in March, you would have been anywhere from 4,000 to 4,000 to well, if you start from here, it would be anywhere from 4,000 to 9,000.
Hey Jim, my purchase entry point was probably 1 to 2 weeks before April. I hadn't looked at Bitcoin or traded any Bitcoin since maybe January, February of 2018. It was the first time I pulled open my trading screen again and started buying again right there.
Nice. Yeah, this actually a lot of people bought during this time. Back in March and April. The smart money anyways. So as you can see, if you just follow this 50-day moving average, you can see where you can buy. Now keep in mind, okay, that you can't always wait for the 50-day, because you don't know when it's going to go down to the 50-day again, right? Because it can go, we don't know this, but let's say it goes to 40,000 before it hit the 50-day moving average. And so if you wait for 50 days, it can be too long of a wait. And this is the reason why Mike told you earlier to do it in tranches, right? So you buy some now, some when it goes down, and some more when it goes down. He used the term limit orders, and limit order just means that you're placing your order ahead of time. So that way you're not buying it at the market price. That's all it means, okay?
For the person that's not technical, just go 10% or 20% below the price. And, it's just common sense to buy it lower if you can.
Right, yeah. Exactly. So I just show you the 50-day moving average. Okay, I'm gonna now show you the 100-day moving average. Okay, so if you stay at the 100-day moving average, you would have bought right back here in September around 10,000. Yeah, you would definitely bought here back in March and even in April. Anywhere from from about $4,000 to $8,000 in this range. Okay. Okay. So
I was gonna say one thing too, Tim. I misspoke. I said I never traded it prior to that time frame. I did catch the 300% scalp trade that I did several months prior. I think it was right about there.
you probably
I did
did
a
it here.
300% scalp.
Yeah. All right. So let me show you. I like, one of the things I like to do is go back to 2017 because that was recent and it gives us really good data for us to tell. So if you look at here, if we use the 100-day or even the 50-day moving average, you can see that back in 2017, we don't have a lot of buying opportunities. Okay. You have, so you have in January 2017, you had a buying opportunity. March, you had a buying opportunity. July, you had a buying opportunity. September, you had a buying opportunity. But that's it. That's like 1, 2, 3, 4 buying opportunity that touched the 100-day moving average. Okay. And, so you would have missed out. If you were only buying off of this, if you bought it, it's great. If you didn't buy it, and if you were trying to wait for it, you would have missed out on this whole rally up, and you would have to buy back when it was 10,000, which I mean, relatively speaking, comparing to what price is today, that's still good. So let me go back here and turn this back on again. Now, if you were using the 50-day moving average, you would have had a bit more buying opportunities in 2017. Okay. Now, if you use a 20-day moving average instead of 50, in a bull market like we are right now, you would have a lot more buying opportunities, as you can see here. Okay. So let me show you what does it look like, in real data. Okay. So what I did, was I went back and basically pretend like if we had bought every single time that it went below the moving average that we're targeting. Okay. And I just did it based on when it first went lower. I didn't do it based on if you had bought every single day that it was lower, because that would require a lot of money to average your buy that way. Remember, I'm trying to keep this as simple as I can for you guys. So this is not like a super advanced, strategy, but this is like in stock market, a 100-day moving average is a very significant support level that big banks will come to buy. If you have, let's say, if you have like an Amazon stock, right, like a blue chip stock like an Amazon, and it hits a and it hits a 100-day moving average. Okay. Okay, let's take Amazon as an example. Okay. Just to kind of give you an idea. So pay attention to the yellow line, okay? Let me just blow out. I just want to explain how it works. So, whenever Yeah, you know, 100-day moving average is a pretty significant support number. So whenever stock prices goes under 100 days, you know, a lot of institutional or bigger investors will jump in and buy, especially for a stock like Amazon. Okay, right now it's under 100 days, as you can see. Okay, the next major one that doesn't come very often, it's a 200-day moving average. If you can buy stuff like even Bitcoin at 200-day moving average, like you're golden. That's, you know, if you ever want to know when can you go all in on something, the 200-day moving average is that when. Okay, so let me switch back to Bitcoin for us here real quick. And I'm using, you know, I don't know if you notice when I type in, so I selected Bitstamp only because their data goes back to 2012. If I select, you know, Coinbase, their data goes back to only 2013. So they don't have as much data as Bitstamp does, but it doesn't matter. You can use for what you're doing, you can use Coinbase. So anyway, so here's your 200-day moving average. You know, it would, if you had bought under 200-day, yeah, you would definitely be buying this whole area here, you know, 4 to 8,000 here, this whole area here. So yeah, so your average buy is probably at least for this year anyways, would be in the, like, you know, $6,000 average buy per Bitcoin. Okay. So in 2018 here, as you can see, it hang a lot of time. So there was a lot of opportunity to buy under 200-day moving average back then. But 200-day moving average as a support for Bitcoin is a really strong support. Okay. It doesn't hang out underneath 200 days very much. You know, if you look at like 2017, the entire year of 2017, it never was under 200-day moving average. It touched it here back in April 2017, but it was, yeah, it just like barely touched it. Yeah, that's see how it's a really strong support line. Okay, I mean, you know, yeah. So you would have to go all the way back to October 2015 was when it went below the 200-day moving average. So the entire year of 2016, 17, it never fell below that. So that's the, you know, so the 200 days is among your best. You know, if you want to have an opportunity to go all in. Now, whenever it goes below 200 days, most people are very afraid to buy in. You know how, like, you know, Warren Buffett says that, you know, you buy when there's blood on the streets, right? Well, when there's blood on the street, it's a very scary time to buy. It's like when when Bitcoin was tanking back in 2018, right? Buying, yeah, even though it fell underneath the 200-day moving average, buying underneath here was very scary. Okay, because you don't know, well, how much further is it going to go? People will talk about going to $1,000. You know, going. I mean, so you just don't know, because it fell. It fell. I mean, 20,000 all the way to 3,000 something. So that's a pretty big fall. But the smart money, what they do, like what Mike was saying, they buy it in tranches, right? So, you know, they'll buy some here, they'll buy some here, they'll buy some here. So it averages out. To try to time these bottoms right here, you know, it's very hard to do, and it's unless you know what you're doing and you have successfully timed these low markets. I don't recommend to try to time the lowest. Okay, you don't time the lowest, you don't time the highest. Your goal is just to dollar cost dollar cost average. Basically, what dollar cost average means is this, okay? Let's say you bought a Bitcoin at 10,000, and then you bought another one at 15,000, and then you bought another one at 5,000. Well, if you average your three buys together, your average is $10,000, okay, for that one Bitcoin. So that's the strategy you want to use. You don't want to try to like, oh, I think this is the bottom. I'm gonna buy it all here at the bottom, or I think this is the top. I'm gonna sell it all here at the top.
Tim, hey Tim, this boat right. Are you recording this, bro?
I am, yeah.
All right, cool. Nice seeing you, homie.
Yeah, thanks for coming on, buddy. All right. So where were we? Yeah, so not to time it. Anyway, so okay.
I was gonna say, in the early historical observations, Bitcoin would crash upwards of 97%. And the more mature it gets, the less it crashes each time there's a bear market.
Yeah.
I think if you do the math from 20,000 down to 3,800, it's something like 70% or whatever the 70 something percent retracement is.
Yeah.
And so the younger coins tend to crash as much as 90 to 80%. And the more mature it gets, it won't crash nearly as much, and it'll gain much more stability is the thesis.
Right. So yeah. So what Mike is talking about. So if you take the highest of Bitcoin back in 2017 and the lowest of Bitcoin back in 2018, you can see here it dropped 84%. Okay. So Bitcoin is a very volatile investment, and so just know that it's not all fun and dandy.
That's also looking at 1 year. That's 1 year. The 1 year, everything comes down to a timeline too. So look at it for the last 5 years.
Right. Well, yeah. So of course, but I'm saying that to say, just know that what you're getting yourself into, Bitcoin is a very volatile investment. It's still very volatile. As more and more, institutional players come in, it will become less volatile. But, you're talking about jumping from here. This is March, okay, beginning of COVID to now, 617% jump. That's that's a huge jump.
It's decent.
Right. Talking about volatile, so it can go the other way. So anyways, so here's what I did. So actually, before I show you guys this, were you guys able to follow the moving average strategy so far? Okay. All right. Awesome.
By the way, Tim, real fast, I need to turn down this freaking Clubhouse stuff. Is so freaking addictive. Hey, Ty's been on here, Tim, for like 5 hours. Ty Lopez has been on. He had 2,300 people in his room. Anyway, so he's talking about buying Pier 1 and Steinmark. Anyway, but also on options. So I know you're looking at Bitcoin, but I'm also been doing options for a while, and so we use simple moving averages and exponential moving averages. Similar to the Fibonacci scale, where you can use like a 9, a 20, a 26, a 52. So you can kind of create those moving averages and kind of create the Fibonacci. And so I just kind of tell you that the moving average is pretty common to use, not just on obviously on Bitcoin, but on trading options and stock and in general. Most of the time, people look at like the 9-day. And for a tighter exponential, then like a 20-day simple, and just kind of follow those, and then look at the VWAP, from there. Which I know there's not really a technical kind of VWAP for Bitcoin, but it's kind of a similar concept. So I was just gonna chime in with that. Maybe it's that's value.
Yeah, definitely. What everything you just said went over most of the people's head on this call, I'm sure. but the point being is that what the whole industry has done is taking all of the trading strategy from from the financial market and apply it to the crypto market, because in any kind of financial market, whether it's stocks or gold or forex or Bitcoin, they all follow this the same kind of mindset, because the people trading them, that's how the people trading, like the mentality and the psychological of the way the people trading them, and so a lot of these things, like it works kind of like placebo effect. The reason why they work is because so many people believe that they work, and so that's what makes them predictable. It's not because the tool itself is predictable, but because human behavior is predictable. And so that's what makes some of these things work. But anyways, so here's what I did. So I went and basically assumed that if I bought every time Bitcoin dropped below the moving average that I'm going after. So like this on this chart you see here, this is a 100-day moving average. Okay, what would my investment have looked like? Okay, so in 2012, my average buy of a Bitcoin would be $5.44 for a Bitcoin. Okay, and another thing too, I did it based on if I had bought one Bitcoin per buying opportunity. Okay, so if you look here in 2012, I would have had 10 buying opportunities. That's why I have 10 Bitcoins here. So 10 buying opportunities in 2012. In 2013, I would have only had 3 buying opportunities, because 2013 was a boom like 2017 was. Okay, and then and so on. Okay, so if I look at my my investments in 2012, I would have invested $54.38. And I would have made you would have made $264,000 off of that $54 investment if you had bought Bitcoin back in 2012, using the 100-day moving average as your strategy. Okay. In 2013, you would have invested $305 and made $79,000. Okay. And as you can see here, here's the percentage. 2012 is 487,000%. 2013 is 25,000%, 25,890%. In 2014, you would have invested a total of $1,279. You would have made 51,000, a 4,000 return, which is still great, right? And so on. I'm not going to go through every single year here. 2017, let's get closer to home here. So 2017, if you would using the 100-day moving average, you would only have 3 buying opportunities, and you would have invested on average $1,289 for one Bitcoin, invested a total of $3,800. And you would have made $75,000 for a return of $1,900. Okay, 1,955% return. Now, the same strategy in 2018, though, because 18 was a very bear market, so everything was going down. Still great, but you only made 197% instead of the thousands of percent like you did in a bull market, right? 2019. You would have made 212%. 2020, because there hasn't been a lot of buying opportunity for a 100-day moving average here yet, you would make 181%. Still not bad. I mean, 181% in 1 year. Where else can you invest your money and make that kind of money, right? So even in a really bad year, you're still doing phenomenally well over any other investment. All right, now if you had done this strategy from 2012 until now, okay, your total investment would have been 182,000. And you would have had 51 buying opportunities, 182,000, and you would have made $1.1 million, which then gave you a 641% return. And annualize it, 71% annual return, phenomenal. If you invested, which is basically right around the time I got in December 2016, November 2016. And if you had used this strategy, you would now have 22 Bitcoin, and you had invested 174,000. I did the profit wrong because I didn't minus the money that you invested. Shoot, let me see. Let me do that real quick. Because that's gonna change things a little bit here for us. But anyways, so yeah, so if you did from 2017 until now using this strategy, you would have made 234%, 58, which is annualized to 58% a year. Okay, still great. So basically, what this tells you is that knowing when to buy makes a huge difference in using this strategy. When you're like if you if you bought in 2017, okay, and you don't buy anymore, you just wait until now, you would make a much greater return than if you bought in 2017 and 18. Obviously, we don't know when to buy exactly, right? But the point being is that when you're at the beginning of a trend, like we are right now, we're still in the beginning of an uptrend. When you're buying at the beginning of an uptrend, you get to ride that entire uptrend. If you wait until the end of that uptrend, you can still make money potentially, but you won't make nearly as much, right? So like, let's take 2018 as an example. To the beginning of 2018 was kind of like the end of that uptrend, right? So you don't make nearly as much as you would have, like you did in 2017. Okay. All right. I'm gonna send you guys this spreadsheet here so you can check it out on your own. But for the purpose of now, I'm just gonna undo what I did here, so that way I can compare the other moving average with you guys. Okay. Now let's say so pay attention to let me see what number would be good for you to pay attention. I also did one here where you can change this. So let's say instead of each buying opportunity you buy an entire Bitcoin. Let's say if each buying opportunity you buy only $1,000 worth of Bitcoin, what your return would have been. So in 2017, you would have invested $305, and the value now would be $5,900 for a $300 investment. Okay. The reason why is because 2017 you only have a 0.24%. No, let me see how many buying opportunities you had. 2000. Oh, three buying opportunities. Okay, yeah. So some numbers off here, but anyways, that would have been your Okay, so anyway, so I did this just for comparison. So if you use the 200-day moving average, as you can see here, there are years that you don't get to buy anything. 2016, 17, you would have been completely out of the market because there was no buying opportunity. Okay, so your overall return is not that great. Okay, 150-day moving average. Very similar to 200-day, right? You miss out on a lot of opportunities. But look, this is an interesting thing. Look at this. Let me go back here. All right, pay attention to these two numbers, okay? If you started with the 200-day moving average from 2012 until now, 2012 until now, you would make a 79% annual return for the last, however many years, 8 years, right? If you did 2017 now, you make a 55% annual return. 150-day moving average, 88 and 50. 100 days, 71 and 58. So they're pretty close up there. If you're doing it, over a long haul. 75-day moving average. Okay, okay. 50-day moving average. All right, jump. So 50-day moving average is actually better than 75. So 87, 69. Let's compare this to the 100 days, 71.58, right? So your 50-day moving average over a long haul works out pretty well. And just know that, more buying opportunities also means that you're investing more money as well, right? If you look at your total investment from a 50-day moving average, your total investment is 232,000 here, 218,000 there. Versus a 100-day moving average, your total investment is only 182 and 174, right? So as you go to lower moving average, you can see that you're having to invest more money, because the strategy's, expecting you to dollar cost average 65, 70, 65, 62. All right. 10-day moving average, 671, 64. Okay, 5-day, 70, 61. All right, let's look at 2017. Because I think that 2017, 2021 here, 2021 here, it's going to be not exactly, but I'm expecting it to be similar in terms of being a bull market, like it was in 2017. It might not have as strong of a gain because 2017 gain was pretty huge. Let's go back to 2017. Okay, right around here. So we're talking about, and hold on here, let me, all right. 2017 was, oh, let me delete this thing. A 2,500% gain in 2017. That's huge. A 25% gain in 2021. What would that bring us? What price would we be at? Holy cow! Let's take a look. We're just gonna assume that. Let's see here. I don't think we're gonna go to. Oh man, I need to shrink this a lot more to get 2,500% fit on our. She's still going. All right, let me shrink this even more. Yeah, we're talking about a whole lot of money here. Now, I don't know this for sure, but I would love to see 2021 have the same gain as 2017, but I'm not banking on that. Jesus, I still need to shrink this down even more.
Hey, Tim, I would a few conversation pieces to talk more of the macro or the fundamental bullish thesis on Bitcoin is, it's seeking, in theory, it seeks to compete as a reserve treasury asset, which is competing directly with gold. And I was just pulling up the market cap of gold, and the market cap of gold is presently sitting around 10 trillion. The current market cap of Bitcoin is about $500 million. So if it just reaches parity with gold, that's a 20x gain. And it's with institutional investors like Paul Tudor Jones, countless others that most people probably won't know. That's part of the overall thesis, and who knows how high it'll go in 2021, but personally, I believe that it's going to have at least a 3 to 10x in 2021. But time will tell. And if it just, now more than ever, everybody sees the funny money being printed, and with there being something to the tune of 20% or 25% of all fiat created in the U.S. was created in 2020. People like Michael Saylor, as a gentleman, CEO of MicroStrategies, a CEO that got heavily vested into Bitcoin, over 475 million and dropping another 600 million. So he's almost vested almost 1.4 billion into Bitcoin.
Wow.
I don't think he's invested all that just yet, but he's one of the forerunners in the space. But he put it really well and eloquently, in the sense that he realized he was sitting on a $1.2 billion ice cube, and he said that if he were to sit in cash over the next 2 to 5 years, and really in our opinion, his opinion, he was saying over the next 2 to 3 years, if he were to keep that in cash, he would likely lose 50% purchasing power, and that's my position as well. And for those reasons alone, if we get to parity with gold, fantastic. But if people, it's also competing with fiat. If people just put in just 2% of world fiat into Bitcoin, I mean, it's $1 trillion. It is ginormous. It's 100 to 200x from where it is today. And so when we talk about Bitcoin and the macro fundamental, like bigger picture, I'm looking at a 10-year time horizon of 100 to 200x still in Bitcoin.
Wow. Yeah. That's crazy numbers. So anyways, so check this out. If 2021 has the same growth as 2017, which is 2,500%, you're looking at $712,000 for one Bitcoin. That's crazy. I would love for that to happen. I don't think that's going to be the case. But yeah, I mean, but it does look positive. Yeah. Now, can there be another correction again and the market goes down? It can happen. I mean, no one ever know for sure. It certainly can happen. But it's looking hopeful, I guess is another way to say it. All right. So anyways, so in terms of comparing 2021 to 2017, not saying that they're going to be exactly the same, but they're both bull markets like that. At least for right now, that's what I can tell. Okay, that they are both bull markets. So if you look at so now I want you to pay attention to the returns in 2017. Okay, so that can that kind of give you an idea. So basing on using the strategy that I'm sharing with you today with the moving average, in 2017, okay, a 5-day moving average would have yield 527 526%. Okay. 10-day moving average yield, 675% gain. 20-day moving average yield, 649% gain. 50-day moving average yield, 1100% gain. 75-day moving average yield, 1500% gain. 100-day moving average yield, 19% gain. Okay. And then 150 and 200 get no gain because there was no buying opportunities. So I'm trying to say that if this market was like 2017 market, your 100-day moving average is your best bet. Okay. Now keep in mind, there's not a lot of buying opportunities, and you kind of missed that boat already. So you do have to wait for a major correction to go, because if you look in 2017, there were only 3 buying opportunities. Okay. So so the next best thing after a 100-day moving average is a 50-day moving average, and that would only give you 7 buying opportunities. Okay, still better than 100 days, but not a whole lot. Okay, and then if you go to a 20-day moving average, you would have more opportunity. Okay, all right. So that brings us back to the question of what should I do? Can I buy more? Can I, do I wait for do I wait for it to come back? I'm gonna plot all 3. So here's your 20-day moving average is this aqua color here. 50-day moving average is your white one here, and then 100-day moving average is your yellow. Okay. Like Mike was saying earlier, should you get started? The answer is yes. Go ahead and buy something now, but don't buy the entire thing. So you can buy a third of whatever you were planning to invest. You can invest a third now, and then another third when it corrects down to a 20-day moving average, and then your third could be when it corrects down to a 50-day moving average. So that's one strategy that you can implement. That will dollar cost average your buy. But what's really, really important is that, as you get more money, put it aside. So that way, especially in this market, when it hits a 50-day moving average, go buy some more, right? Even if it's outside of what you had initially planned, right? Go find a way to make, to get some more money to invest more. And if it ever goes down to 100-day moving average, this year, then definitely buy some more. Okay. Now, when I say buy, now there will be days where it's under the moving average for multiple days. Okay, if let me zoom in here. Like back in back in March, right? Back in February and March of this year, where March, okay. Yeah, where it was under this, let's say it was under this 100-day moving average for almost 2 months, okay? I don't recommend that you buy every single day that is under, it would totally dollar cost your average down a lot if you do it that way. But the reason why you don't do it that way is because you don't know whether or not it's going to go down even more. Okay. And like how much can you keep going, right? If for some whatever reason the market reversed on us like it did in 2018, you don't want to end up having to buy. So if 2018 here, okay. Almost, December, almost the entire, let me see how long. For the most part, okay. For the most part, it was from here to here, okay. we're talking about, this is January 2018 all the way into February 2019. So you would have basically buy, the entire year. I don't recommend that. I think that would be a lot of buys. So you do need to get more. Yeah, you do need to get more understanding. I wanted to, find a way to keep it as simple as I can of a strategy for you that any of you guys can go and implement, without having to learn all of this technical analysis, without having to, to chart and Fibonacci and VWAP, like what, Corey was saying earlier, all exponential moving average and simple, I mean, for most of you guys, I'm sure that's over your head. Just keep it super simple. And so, and the simple strategy that I'm presenting.
It's called 20-day simple moving average.
Right. Yeah. So just keep it super simple. Yeah. So anyways, there you have it. I want to check in if what I went through was over your head or not. Has this given you guys some clarity on a simple strategy that, of when you can buy and when you can buy more? All right.
Yeah, it's definitely one of the most fundamental ways to buy in is watching the moving averages. So yeah, it's one of the most popular ways to watch the market.
Yeah, for sure. Okay, let me see here. I'm gonna look back at some questions you guys might have had. Brian asked, Brian asked, are you bullish that BTC can hit 50K? What do you say to that, Mike?
Like I said, I'm expecting a 3 to 10x coil spring here. And personally, I'm my money's on somewhere between 80 to 125K within a retrace. That might be 50% retracement. So you'll probably get some extra opportunities after it does the spike high. But one of the things I was listening to from these institutional players is that something like 65% of all Bitcoin is locked up with either long-term institutional buy and hold investors and or lost to the marketplace. So there's only about 35% of the existing Bitcoin that is actually liquid right now. And with people like Michael Saylor buying up 1.4 billion, and that leaves very little room for other institutional billionaires to come into the market without pushing the price up immensely from here. So there's very little quote unquote resistance for the price to go high from here. So yeah, I mean, 6-figure Bitcoin, I think, is definitely in the cards for 2021, but it could go down for 2 years. I don't know.
Right. Yeah. Nobody knows, by the way. Like, doesn't matter, if it's CNBC or some genius that that say they know it. Nobody knows for sure. Okay.
But I'm somebody that does like to do some short-term trading, but once it gets to an all-time high like this, after hitting a previous resistance where it hit the all-time high that was 20,000. Once it crossed over that, I got fully allocated all in again because of some of the fundamentals of technical trading. When you hit an all-time high and you've exceeded a previous all-time high, it's a very bullish signal. So 20 to 25,000, in my opinion, is a floor, or I don't foresee it going lower. But again, who knows? I just know that it's a psychological barrier in people's head. And if it hits those prices again, this guy's buying.
Yeah. Yeah. So okay. So next question. Karen asked, is there no limit to how high Bitcoin will go? Yeah, there's no. Yeah.
The real question is, how far can fiat purchasing power go? And there's over 6,000 recorded fiat currencies in history that have all gone the way of the dodo bird and gone extinct. And so if you study fiat currencies and government defaults, it's something that's been built inherently into every fiat dollar in history. And so the question isn't how high can Bitcoin go? It's how far can fiat purchasing power fall, and can it go away? Tim mentioned something really cool that I also experienced in Mexico, and that was Tim. You were talking about the currency reset, and y'all had to exchange old currency for new currency.
Right. So when I was young in Vietnam, and in my lifetime, Vietnam has changed money twice already. But the time when I had some memory of it, and then my I talked to my mom about it as well. But I think I was in elementary school when this happened. The Vietnamese government printed new money, and they gave everybody 30 days to exchange old money to new money. Not only they only give you 30 days, but they limit how many one family can exchange. And so, literally within 30 days, you used to have $1,000. $1,000 becomes $100. And you can't even exchange all the money you have for the new money. So my mom was saying, like, the way that, people who had more money, what they had to do was they had to find poor people who don't have money, pay them money to go and exchange it for them. But a lot of cash was lost in that exchange. Okay. And so, I mean, gosh, I can imagine something like that happening here in the US, but with the amount of money we're printing, like, where is it going to go? Where's the bottom? Right? Like what Mike is saying,
In Mexico, I was roughly 13. I was born in 82, and 94, 95 is when Mexico had their Mexican peso crisis. And it went from about 5 pesos to the dollar to about 13, I think even as high as 20. It was a 70% devaluation overall. And I couldn't see prices in stores. There was water rationing. I think there were rolling blackouts for electricity. So all that left a prepper mindset and a completely indelible, non-forgettable experience, ride of a lifetime, going down to Mexico, visiting friends and family. And I came to realize that, fiat paper money is floating. It's not like a ruler where you can measure a foot. It's floating. It fluctuates up and down. And yeah, it's just so something like this, like Bitcoin, to me is the closest thing we're going to get to perfect money,
right?
Store of wealth.
Yep. All right. Let me see here. John said, I read BTC should hit 300,000 by end of 2021. It's possible. It's possible.
10x, baby.
10x, yes. It's possible for sure. As you can see, I mean, if it repeats 2017, it would be at over 700,000. Forget about 300,000, right? So it's possible.
10x sounds crazy too, by the way, for a lot of people. But and Tim, I was mentioning to you, I was a buyer of Bitcoin at 100. Once it spiked low at 150, I bought in at 200. And from 200 to 20,000, from 2015 to end of 2017, 2.5, almost 3, about 2.5 years, that's 100x gain. So for it to go 10x in a year, I mean, it's just
yeah,
it's par for the course.
All right. All right. So Brian asked, okay. Yes, I'll go, Brian, and I'll jump back to your question, Karen. To help diversify, are there any sleeping giants? Maybe Tron with their content sharing platform, which is great for gaming. What do you think? I only follow Bitcoin and Ethereum. Those are the only two coins I follow. I used to follow Litecoin. I still have a bunch of Litecoin miners, but I stopped following Litecoin as well, mainly because the trading platform that my company trade with, the ones that has high volume is Bitcoin and Ethereum. So those are the only two that I follow. But I know Mike follows a lot more other different types of coins. So Mike, do you see some sleeping giants?
I do something called ratio trading. For people that are gold and silver or oil and gas and different things, you compare the price of gold to, say, the average cost of a house, or the average cost of a barrel of oil, or the average cost of a gallon of milk. And when you look at gold and silver, to give you the example, gold comes out of the Earth's crust at a ratio of about 1 to, I believe, 16 when you compare it to silver. And so if you consider Litecoin silver to Bitcoin as gold, many people consider silver to be like, many people consider Litecoin to be like silver. And I forget the exact amount of tokens, but it's like either 20 times greater volume of tokens and coins in Litecoin. So theoretically, I forget the exact number, but theoretically, it should trade at fair market value of about 1/20th to 1/50th the price of Bitcoin. So I do favor Litecoin over a longer term horizon, but it's so hard to say because the popularity of Bitcoin is there, and Litecoin is a copycat. So yes, so it's 4 times. So about 4 times the supply. But the last bull run, Litecoin hit 146th or 147th the value of Bitcoin. So if you get $300,000 Bitcoin, go ahead and just do what the last bull run did, just as your hypothetical model. Divide, whether you're dividing 100,000, let's do 100,000 to be more conservative, but divide it by 50. What's the price, or even the price now? Let me do a calculation right quick.
Okay.
To give you an idea of how I look at the fair market value of Litecoin from time to time. But right now the price is sitting right around 28,000, give or take. 28,000 divided by, I'm going to say 47. That's $595 Litecoin is where I think the fair market should be of Litecoin, based on today's price of where it's at. Now, I'm quasi expert, right? I'm not, when it comes to like cryptocurrencies and this and that, I'm just a speculator like everybody else, but I suspect Litecoin to outpace gold or outpace Bitcoin. And same thing with Monero. I expect it to outpace. And same thing with Ethereum. I expect it to outpace the growth of Bitcoin, but it's only mainly because the market caps are so small. But Bitcoin is the gold standard. It's the way to go mostly if you're going to be quote unquote conservative.
I'm going to do something here real quick and see.
And I do dabble in I do buy and trade and hold different market industries in crypto space. So I do diversify into finance, infrastructure, different kinds of finance, decentralized exchanges. So there's all kinds of places to diversify into. And I do like to speculate with market caps that are between 20 million to 100 million. And so those are much more volatile. And to answer the question, yes, I do look for some sleepers in the different industries.
Okay. I'm gonna let you. So do you have any sleepers like on your mind right now? Like which one are you kind of? I guess an altcoin that you mentioned Litecoin, Monero. Which other ones that you're focusing on?
Yeah, my core positions are Bitcoin, Litecoin, and Monero. And then my altcoins that are infrastructure plays are Ethereum, EOS, and Neo. And those are tech infrastructure plays that are building out the decentralized network of cryptocurrency. So those are the big three to have in your portfolio. There's a lot of other finance ones, OMG, Omisigo, Huobi. There's just so many. I could literally rattle off 50 to 100 different cryptos. But my core positions are really only less than 10 to, actually about 5 core positions, because I also don't like to be doing this all day. But it is fun when, when you're doing well. But 5 to 10 is really what I trade around or accumulate. And I may swing trade 20 to 30 different coins though. So it just depends on what my cash liquidity is and what's available in the markets.
All right, I'm going to show you guys something. So I just did a quick test on Litecoin on a 50-day moving average. Okay, so if you look here, let's start from 2017. Okay, so in 2017, you would have made 355%. 2018, 2.2%. 19. This is when I lost faith in Litecoin. I invested so many in Litecoin mining machines. Anyway, so the reason why I invested a lot of Litecoin machines, mining machine, is because of how it performed, 2006 and prior. But in 2018, it sucked. Anyway, so if you look at this, if you look at these, okay, and then you compare this to Bitcoin 50 days, as you can see here, Bitcoin has outbeat Litecoin every single year, okay? And this is the reason why, if Bitcoin is doing so much better, why even bother, right? So let's do the same 50-day moving average. Let me just duplicate this. I'm just going to call this.
Yeah, a lot of investors are Bitcoin maximalists, and that's probably the more institutional big money.
Yeah,
is going to be more of a Bitcoin maximalist, and I like to try and pretend I can beat the markets or beat the Bitcoin. Sometimes it works and sometimes it doesn't, but.
All right, let me,
yeah.
see.
I usually trade stuff that I think is going to do a quick double to a quick 4x. And then I sell out of it and go back to Bitcoin or Litecoin and Monero, and some of the diversification of those different tokens and coins. So the intention for me is always to move back more into the mainly Bitcoin and like I said, those other 2 positions that I have in Litecoin and Monero.
Where are we at right now? So Ethereum is at 740 right now. Okay. All right. So Ethereum on a 50-day moving average. Take a look at 2017 until now. So 156, 90, 327, 188. Let's compare that to Bitcoin. See, Bitcoin still beat Ethereum every single year, right? So, when you look at these kind of data, you can see that Bitcoin is the winner. Like it's if you look at from 2017 until now, 276%, Litecoin 99%, Ethereum 187%. So So this is the reason why I'm a big, proponent of Bitcoin and say, hey, unless you have a lot of money that you need to diversify, and even we're talking about billionaires are not even diversifying. They're just like Mike said, Bitcoin maximalists. So they're putting the whole $1 billion into Bitcoin. And the numbers, the stats doesn't lie. It's showing you right now that it has outperformed these other cryptos. So, so yeah, there you have it. Here's my rant.
I would still say, there are very few people that can make crypto and trading their life or their main bread and butter. But for me, it's just where I put my long-term savings. And the wonderful thing about finance and leverage is you can always, whatever it is that you're doing, invest into yourself, but definitely doing this is a big part of it. But I think I make between 20 to 36, even 40x every time I flip a house through the magic of leverage.
Right. Yeah. I mean, I don't recommend trading for most people. it's you gotta know what you're doing, because my company, we've lost a ton of money, as our learning curve to get to where we are. So trading is pretty hard stuff. All right. Mark asked Tim, what percentage crypto versus stock do you shoot for? I don't do any stocks. I just do real estate and crypto. That's all I do. Those are my only two. Do you do stocks, Mike?
No. To me, stock certificates are obsolete to blockchain. Stock certificates are simply a form of custody. Whether you're holding blockchain or stock certificates, to me, there's no difference in terms of the concept of owning something. The difference really is, for me, the custodial risk, where blockchain you can download into your own wallet. The equivalent of owning a stock certificate would be to call up your Schwab or TD Ameritrade or whoever and tell them to ship your stock certificate to physically sit in your vault. And for me, blockchain is just makes so much more sense.
Right.
Also for the purposes of dilution, like you were saying, XRP can be diluted to infinity. Blockchain, there's a certain governance and algorithm to the coin that's adopted from the very beginning. And again, for safety and security and capital preservation, blockchain, baby. That's where it's at.
Yeah, and if you also too, like if you look at, let's take Amazon, right? Jeff Bezos can do something stupid. I don't know, he probably wouldn't, but he can do something stupid, or there could be some kind of like what happened to Enron as an example, right? Some kind of scandal, some kind of, and it crashes the entire company. There's no one person or group of people can damage Bitcoin the way they can damage Enron. Like, it's just not possible, right? And so like crypto is a much stronger play, and I love the way you said it, that it's outdated. Is that the term that you use, right? Like stock certificates outdated compared to blockchain. And
they're obsolete. Yeah,
obsolete.
There's a concept known as tokenization. Kodak was one of the first companies that took one of its subsidiary entities. It tokenized. It was one of the first tokenized public companies that were trading, and instead of trading stock certificates, it started to trade in blockchain asset, basically. So it just had a blockchain ticker symbol as opposed to a stock certificate ticker symbol, which there's no real difference in terms of the ticker. The just core difference is it was put onto the blockchain.
Right. Awesome. All right. So Brian's asking, what specific do you do with real estate? Both Mike and I, we buy, sell, flips, and then some buy and hold. Mike specialized in seller financing. So basically, it's, instead, when he sells it to a buyer, instead of the buyer going to a bank and borrow money, basically Mike's company financed that to them. So that's his strategy. But I personally do a lot of flips, and more recently, I've been more focused on land. So I do flip land and also hold some as well. But yeah, I mean, real estate is, Mike, you and I talked about this earlier today, that, I mean, just like how people are pouring their money, with the devaluation of dollar, people are putting their money into assets like Bitcoin, like gold, and real estate. I mean, everybody needs real estate. And so real estate is going to be, just like we're talking about how bullish, Bitcoin is for 2021. Real estate, on the other hand, is not as bullish because of the uncertainty of, what the foreclosure is going to look like after, this whole COVID, eviction memorandum and foreclosure moratorium are lifted. Would there be a flood of foreclosed properties, that's going to happen or not? Regardless if it's going to happen or not, there's a lot of smart money are ready to scoop up whatever real estate that they can. And so yeah, I mean, this, 2021 is going to be an absolute amazing market for real estate as well.
There's a phenomenon I've studied going back to the monetary reset and devaluation of currencies, and that's something called a crack up boom. I don't know how familiar or if y'all have ever heard the term crack up boom, but it's basically where there's asset price inflation that may not necessarily keep up with the strategic reserve treasury asset. So to give you an example, in my neighborhood, I was telling Tim, I've lived in, or my family, my wife their family has lived in our neighborhood since 2006. And while there may be some demand for the real estate over here that's pushing prices higher, I do believe it's due to the crack up boom phenomenon, where, you see the stock market going higher, but we're perplexed as to why it's going higher. We're perplexed as to, like, what's the good news or data that's suggesting markets should go higher. Well, a lot of this funny money going into the system creates asset bubbles and higher prices of stocks, real estate assets, food, different things. And so I see a crack up boom occurring in real estate, where it's going to go up in price, but nothing compared to Bitcoin. The orders of magnitude higher that Bitcoin will go is going to shock people. And to give you the perfect example, since 2006, real estate has gone up about 3 to 4x in my neighborhood. But since 2008, Bitcoin has gone up orders of magnitude, hundreds of thousands of fold in gain, relatively speaking. And so, yeah, Bitcoin is going to be a really good place to store your long-term purchasing power and hedge against the just inflating asset bubbles. It's going to be the fastest horse in the race for institutional money, no doubt.
Yep. Awesome. All right. It's almost 9 o'clock, so we're going to be wrapping up this call here. Do you guys have any other last minute questions? So as a result of this, I'm thinking that what's probably going to be best is I'm going to go ahead and create a Facebook group for us. I'll send out the link for you guys to join, and then so that way, Mike and I can give you more sort of like updates as we go along. Whenever price hit like a 20-day moving average, so in case some of those, or 50-day, 100 days, either myself personally, or I'll have one of my staff to do some of these technical analysis here, and give you guys updated on where the trend is this year. I think it'll be fun. It'll be a fun year for sure. All right, cool. Mike, anything else you want to say to wrap up for today?
hodl, hold on for dear life, get in before it's too late. It's better to be in than out right now, in my opinion. Yeah, just like Tim was saying, dollar cost average. I just take $500 out of every check and drop it into Bitcoin. As soon as I get the check, I'm buying Bitcoin. It almost doesn't matter at what price. I do try to set limit orders at where I see 10, 20% lower. Sometimes it get executed, sometimes it doesn't. And don't feel shy about holding some cash if you're going to be doing that. But yeah, just the idea is regular weekly or monthly intervals of whatever your spare liquidity is that you want to dollar cost average is it's gonna be a great rainy day fund is the way I look at it.
Yep. Yeah. And you know, in terms of like this strat, I know we're going through strategies here, but for the people that are looking at this, you know, long term, 5-10 years, they really don't care what price they buy today. Like they're just gonna buy, and then when there's more opportunity to buy, they'll buy more, and then, you know, and over the long haul, it's gonna average itself out. But of course, I mean, with the additional strategy, as you can see here, you know, with the additional strategy, it can help a lot. You know, the difference between getting a 200% return, you know, versus getting, you know, 1,000% return or more, right? It's like, you know, these things are gonna, definitely help a lot. But you are at the beginning of an uptrend, and so you're fairly safe, I would say. You know, if this was like the end of 2017, then that's a different story, right? Because like, you know, it takes a lot more to hold on to that. You know, but you know, when the market is tanking, but.
Historically, bull runs last about 3 to 4 years before you have the major bear market again.
Yeah. So assuming, you know, following history, and that's and same thing with bear market, right? Our bear market was from beginning 2018 until like around mid 2019, something like that. So a good
March 2019.
Yeah.
The announcement of COVID.
Yep. So the March 2020. Yeah. So anyways, but the point being is that, you know, go and learn about this moving average more than what I explained to give you more knowledge. You know, Google, YouTube is your best friend on that. Go sign up for a free TradingView account. You can, you can add, the indicator. Just there's a lot of them. If you just do, if you search for moving average, okay, there'll be, there'll be some that you can select. It really doesn't, like this strategy that I'm sharing, it doesn't matter what kind of moving average you use, whether you're using simple moving average, exponential moving average, volume weighted moving average, or it really doesn't matter, because the strategy I'm sharing with you is more long-term strategy. So the little bit differences in those moving average won't make too big of a difference. Okay, so just select, like you can just select the normal moving average, which is the simple moving average here.
Hey Tim, a few topics I would put out there for future conversations, because I just love doing this and talking about it, would be how to custody cold storage, how to the different exchanges. Somebody asked, is Coinbase the best platform for BTC? Talk about the different exchanges, how to jump into the crypto world. And then I personally really like how to catch falling knives on the retracenet.
Yeah.
That's where I get the good 2 to 4x scalp trades.
That's good. So let's do that. So that'd be 2 separate calls, like how to get started with crypto, which we'll cover about the exchanges. But short question answer for you, Brian. Coinbase is a great place to start. So I say start there. Some people prefer not to use Coinbase because they report if you hold 20,000 or more in your Coinbase account, they do report that to the IRS. But if you're holding less than 20,000 with them, you're pretty safe. So not to worry there. But yeah, Coinbase is a great place to start, and their platform is pretty user friendly. So yeah, definitely just start there. But yeah, so a call for how to get started, and then a call on how to catch the falling knife. That's a really, really good one. We're not going to see too many of them in this market, but it's good to learn. It's good to learn. Awesome. All right, guys. With that, thank you so much for joining in today. I hope you guys had a blast. Mike, thank you so much for co-hosting this with me. It's awesome to have you on and talk back and forth. So, all right, guys, go out there, buy yourself some Bitcoin and buy yourself some more Bitcoin. Instead of Starbucks, put that money in Bitcoin. There you go. That's a good trade. Every time you think about buying Starbucks, you log into your Coinbase and spend that same amount of money that you would spend on Starbucks and buy yourself some Bitcoin. Hey, that's good.
My pleasure, Tim.
Awesome. All right, thanks everybody. This call is recorded. I will edit it and upload it and send it to you out to you guys so you guys can watch it at your own pace. All right, see ya.